Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive right in, take a look, and see what is going on in the Twitter world. At @Finance is where I'm at. And if you want to join our community, finding-value.com. We do have a special coupon code. Special is the coupon code. I put it back on. It is 50% off the first month to try it out for only the first month, or you can get a larger discount on the yearly membership if you want to swap to a yearly membership. So that is active. Christine says, oil has been too cheap, and that gives Trump a window to squeeze trading partners. It was never about the border, folks. It's about growing U.S. federal revenue. Trump oil price is a factor in tariff determination. Of course it is. These guys are going bankrupt. They're going to grab every dollar they can. Now, a tariff, companies and corporations do not pay taxes. Their customers do. This tariff is an extra tax for American citizens. That's what that is. Warren Buffett, we have usually made our best purchases when apprehension about some macro event were at a peak. Uncertainty is actually the friend of a buyer of long-term values, says Warren Buffett. And that's when you want to buy when things are down, when people are fearful. Jacob King says, breaking Mica-driven USDT delistings in Europe, warning of market instability for EU consumers. Don't percent of all Bitcoin demand is fueled by Tether, an unaudited scam created by Maxis. The entire price is fake and manipulated. So as bans spread worldwide, of course they're predicting it will cause instability, says Jacob. Subu Trade says a bullish sign for energy. XLE, the ETF, saw minus 1.8 billion in outflows over the past month. This is the largest outflow since XLE bottomed in June 2023. And whenever you get these big outflows, generally indicate where the bottoms are at in a lot of these. We've got oil versus gold, ping pong in the pattern here. So here's oil versus gold. We had a consolidation in the 1980s all the way to 1999. We broke out of that pattern, did a retest, and then ripped higher for the ultimate tops in 2005 and 8. We went into another large consolidation in a falling wedge, ending in 2020 with an absolute negative price of oil, which was a capitulation bottom. We broke out of that falling wedge to the upside in 2021, 2022, created another falling wedge. We zoom in, and this is what we're doing inside of that falling wedge at this exact moment. This is bullish. Falling wedges are bullish for oil to go higher against gold. Now, gold's been ripping. Gold's been ripping. And we'll see what oil does here over the next, over this summer, we'll call it. Let's talk about Eric Yoon. He says, this is exactly why the U.S. government will not do a sudden gold revaluation to $15,000 an ounce. The Trump administration is potentially slapping universal tariffs across the board so that the LBMA paper gold price suppression will break. It is breaking now. Therefore, allowing the free market to revalue physical gold on its own. This is the genius of Scott Bessent and Trump. The US government does not need to maintain a new gold price by buying more gold. The free market will buy more physical gold. It is the beginning to happen now. And this is riding up gold to some new price. They're going back and forth. Gold to oil ratio, and I flipped them shoulder, head, shoulder, putting in that right shoulder. And we could go a little bit higher, but if you zoom in, we're at a gold to oil price of 1 to 39. That is incredibly cheap compared to history. Can it get cheaper? Of course, anything can get cheaper. Um, there's nothing in the markets to say it can't get too cheap, can't get cheaper. But oil is one of the cheaper commodities out there against gold. And that's how I like to price everything. I like to price it against gold. Gold is your constant measuring stick of 1 ounce of gold. It doesn't fluctuate in value per se. It's just 1 ounce of gold. And obviously, things fluctuate because of the currencies. Gold versus the SPX, so S&P 500 from bottom of the gold market in 1999. Gold's this guy here, and then we've got the S&P 500 underneath it. The S&P 500 was in cycle from 2009, probably to where we are today. We'll see if we roll over at some point. Gold was in cycle from 2000 to 2011. It consolidated, broke out in 2019, and then we are ripping. I do think that we are in a big bull market that's coming for commodities. I think we're going to go sideways in the S&P 500 for a decade or maybe a little bit less. You could see that they both went up in the late 1990s. Gold started to move higher in 1999. We had an ultimate peak 2000 for tech. I think we're doing that same thing going on right now. We'll eventually get a peak in tech. It'll roll over at some point. I don't know when. And then I think they're going to probably print a bunch of money, try to lower interest rates to hold tech up, and then we're going to see a big move. Now, the one thing that may not happen, we might not see a big decline when measured in dollars for the S&P or the Nasdaq. It might all be ratio driven, where you get a silent crash in dollars nominal terms, but you get a real crash of hard assets against it. That could be it. And the reason I think that will be it is because they need tax revenues up. And in order to get tax revenues up, they need nominally everything to go up together. Here's Tracy. Shell takes a $1 billion hit on a wind farm. So Shell PLC said it has written off almost $1 billion and withdrawn from its U.S. offshore wind farm. It's the latest illustration of the reversal experienced by the nascent American offshore wind industry, which was championed by former President Joe Biden but suffered from soaring costs in recent years. In its quarterly earnings on Thursday, Shell disclosed about $1 billion impairment related to an offshore wind farm known as Atlantic Shores. We just don't see that it fits both our capabilities nor the returns that we would like, Shell's chief financial officer said in a call with reporters. So we took the decision to effectively write that off and pause our involvement. Coming back. We've got Bitcoin here. So Bitcoin has been tested in only one country, El Salvador. After 3+ years, usage has dropped by minus 100%. The legal tender laws have been rescinded, and the government has shut down its BTC wallet. No one can argue this wasn't a massive failure. Don't be fooled by the price. Bitcoin sucks. Its price is also entirely propped up by Tether, stablecoin manipulation, a ticking time bomb. I love Jacob. I love that guy. All true. Failure after failure. But the price is going up. It's the best performing asset. Okay, maybe they want you to be there. I don't want to be there. Everything this thing tries to be implemented, it seems to fail. Here's the cycle, the business cycle. Make your bet. Where do we think we are right now? Well, we know bonds are going down, and we know commodities and stocks are going up. I think we're in stage 4. And we're probably somewhere in this stage here. We're not late cycle where commodities go up and bonds and stocks go down. That's that late cycle move. But I think we're still early in this move, just heading into expansion phase. Here's the TSX venture where dreams become reality. You understand the implications of this chart. What lies ahead for junior resource investors will be life-changing. So this is the TSX, Canadian TSX venture, and we've got a dream within a dream. We've got a shoulder. Inside of that, on the right-hand shoulder, we've got a shoulder, head, shoulder. That's your dream within a dream. Have a very big move. I mean, an astronomically big move. If we can break from where we're at today to the neckline and break that and go all the way back 2011 and on, maybe, way up there. What's going to cause that move? A weaker dollar will. And I've got that below of the Canadian USD. SILJ, the latest, tussled. This is SILJ here, breaking out of a falling wedge to the upside, looking pretty strong. Looking pretty strong. And generally, a weaker dollar is what drives a lot of this stuff. But if they don't have the gold, it could also be people running towards physical metals, calling their bluff. Calling their bluff. Rock bottom entries. The hard part is over. Silver has confirmed its breakout. Now let the trend do the heavy lifting. Price structure and momentum readings suggest this rally has serious legs. We post daily analysis in our Substack chat and are confident we'll exit near the highs of this rally. We've got Peter Schiff. Gold has just hit a new record high. Many people are creating meme coins. But I've created something better. An ordinal. The Bitcoin equivalent of an NFT. There are only 50, so they're far more scarce than Bitcoin or Trump coins. Buy them before they moon, have fun. Geez, there's only 50 and they're limited. They're limited. Oh my God, they're limited 50 coins. This should be like 100 times worth more than Bitcoin. Do you see how stupid people are? If you think just because something's limited that it has some sort of value, you're incorrect. Yes, it's great that something might be limited. Ken Griffey Jr. rookie cards, Michael Jordan rookie cards. There's limited baseball bats, limited Hot Wheels, but they're not an infinity number of dollars. Oh, the dollars are all going to come to this particular crypto because it's limited. Not the right mindset, in my opinion. It must have value. It must do something that other ones do not. And right now, the guys that everybody was trying to avoid have their fangs in it. It's tainted. It's done. It's yeah, it's done. Warren Buffett, investment must be rational. If you can't understand it, don't do it. Gold, it's a global thing. And when I said backtest complete in late 2023, I meant it. As always, if in doubt, zoom out. This is gold measured in world currency units. So what's going to happen here? The entire world's going to run at gold, silver, and other precious metals. The whole world could run at commodities. They're all in the same situation. World currencies are going to eat it, which means everyone and everything with all their money are going to run at things that preserve value. You know what they said in, what was it? God, what was that? The Big Short. The Big Short. Gold's the big long. So the Big Short was housing market back in 2006, 7, 8. Now we're doing the big long in gold and silver, and the entire world's going to run at it. So that is what I'm going to call it, the big long. Silver chart is silver breakout. Silver has cleared the upper rail of its short-term downtrend channel on convincing volume. Next resistance levels to watch. And he's got a couple of price points here, 33.33 and 35.07. Any pullbacks to the yellow rising 200 MA are viewed as favorable entry points for accumulation. I already entered this with mass, guys. I'm riding silver. I'm riding platinum. I didn't wait for breakouts. I bought the living crap out of it when it was cheaper than cheap. I'm talking American Eagles, $1.50 over spot, 99 cents when they were on sale back in 2014, or no, 2018. Yeah, 2018. Um, there was all sorts of stuff that you could buy when no one was looking. That's when no one was looking. And then we're going to run this thing to the moon. Now, I've been in it because I'm trying to preserve wealth. I want to be out of the system. I don't want to be in the system. I don't want third party risk. I don't want someone able to block me, a brokerage, an off ramp for crypto. I don't want any of that stuff. And you know what they're going to do? They're going to try to run you into that stuff so they can block you at some point. History doesn't repeat, but gold bull markets can stretch well above the long term moving averages. Early 2000s, it got 80% above in all three legs. We are currently less than 40% above. The 1980s bull was significantly more. Long-term charts don't tell you what will happen, but it looks pretty dang good. You got this pullback in the 2099, big move up, another bowl-shaped kind of cup and handle pattern, and then we were ripping to the upside. A lot more to go for gold. Here's the Canadian United States dollar. We had a falling wedge and then that big breakout. That's when the TSX ran. And we're coming to the corner here, and hopefully we can start to work our way on up. A weakening US dollar and a strengthening Canadian dollar are a big deal. Currency exchange rates are big because that's what determines money flows. Right? I should say money flows determine this. They're interconnected. It shows you money flows are changing. Hasn't changed yet. TSX Venture Index is flashing a rare signal and he's focusing on the right of that shoulder, head, shoulder. And I'm talking about this breaking higher. This will break with it. So those will move together. Generally, when this moves up, you'll see gold, silver, platinum, everything will run. Emerging markets will rip. Some of these emerging markets, the ETF did a 20x. Some of the companies inside of the ETF were doing 50 to 100 baggers. Of course I'm in. Now, are all of them going to do it? No. Do you kind of have to take an educated guess on what could do it? Yeah, you do. Am I going to go after the 100 or 200 baggers? Nah, probably not. I'll probably go after the ones that'll do like a 50x with a high probability of success. That's kind of what I'm going after. The 20 and 30 bag, 20, 30, 40, 50, that's what I'm going after. Rock bottom entries, the TSX Venture Index, I already talked about that. Manish says the single biggest advantage a value investor has is not IQ, it's patience and waiting. Waiting for the right pitch and waiting for many years for the right pitch. So you're waiting for the right setup, you buy it, and then you have to wait a whole bunch longer. That's all investing is. Great futures AM update. We had dry bulk that was up 4%, 2%, and tankers were also up 2 and 3%. Rafi Farber says, this is insane. Eligible gold stocks at the Brinks Vault have rocketed to almost 5 million ounces in 2 weeks, way past the previous all-time high of 3.5 million, the peak of the COVID lockdown panic in 2020. What the heck is going on? And that's the Brinks Depository eligible gold stocks. Ripping higher. What is going on? Brady says, as soon as you stop seeking a why to all price action moves, you can start your charting journey. And as soon as you block noise and inflow, you are free. And as soon as you stop questioning the chart, you can see. Do not search for the short-term narrative. Stay with the charts. What's he saying there? You need to stop asking, well, why did this move up? Why did that do that? You just need to follow the charts, look at the money flows, and then you'll see it cleaner and clearer if you don't listen to the news. John Templeton says, I never in all my life bought a stock because I liked it. I bought it because it was a cheaper bargain than any similar stock I would buy anywhere in the rest of the world. So he's buying bargains. Here's Eric Yoon. He says it is most likely that the universal U.S. tariffs plan or the tariffs on Canada and Mexico are real. The implications are as follows. The biggest paper gold and silver price suppression manipulator in the world, the LBMA, will break, and its ability to price suppress gold and silver prices will be greatly reduced. This is because the LBMA simply does not have sufficient good delivery gold and silver bars for physical deliveries, as we're seeing now. It also can no longer use the New York GLD and SLV vaults as a source of good delivery gold and silver bars. Ongoing industrials, the Chinese, the rest of the BRICS, and the US will compete with each other to withdraw good delivery gold and silver bars from the LBMA. Western miners need to get bigger and stronger to increase exploration and mining supply output. This will take time. There might be some final attempts of paper slams at the LBMA and the COMEX. Nothing goes up in a straight line. Anyone who denies what's happening right now in real time at the LBMA and COMEX either have a low IQ or they are LBMA COMEX manipulator shills. They should be ignored and blocked in this critical juncture. What this is Scott Bessent pushes gradual 2.5% universal U.S. tariffs plan. Trump's Treasury Secretary wants levies to rise month by month in order to give businesses time to adjust. So, as they put these tariffs into place, this gigantic price manipulation is starting to come unwound. That's what's going on. Brady says, been saying gold 3,000, 3,300 and silver $40 to $45 is next. Yesterday's silver tried to break out above the blue bullish falling wedge, but came down below it again. Today's silver is gapping above the blue line and breaking out. Posted on GDX breaking out 2 weeks ago. Posted on gold breaking out 3 days after GDX. The Fed's Powell gave a masterclass yesterday in talking but saying nothing new. And the Fed meeting out of the way, the charts that were already set up for it can now move. Monday silver backtested 30 plus the fib 61.8 and made an undercut low, stylish, that gave it the energy to break out. Been saying for 11 weeks that silver $30 level should hold on a weekly closing basis, and it has. Been saying that the blue falling wedges will break to the upside. They now have. There we go. Silver breaking out. Let's keep the momentum, baby. My favorite chart in the world, says HFI Research. Yeah, buddy, lightweight. As reported, oil global stocks continue to fall, and JPM Global implied they think it's going to go up. What happens if that continues lower, 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 lower? Are we going to get a squeeze in oil? Yeah, probably. Will it be immediate? I don't know, but it's going to occur probably after 2025. That's when I think the world's going to squeeze oil. Rick Roll says a circumstance where you own something that the world is running short of is generally a strategy that has worked well over time. Silver, platinum, oil, nat gas. Coal, too. We're going to get short on energy. We're going to be short precious metals because people are going to be afraid to hold anything else. That's what's going to happen. JSG says, and just like that, WTI back to being significantly undervalued, with today's EIA data showing 7 million barrel week over week draw of commercial petroleum stocks, excluding other oils, implied WTI fair value price of $84 a barrel. It is $11 undervalued, more than 1 sigma below expectation, given history in the dot plots. We are cheap. Here's Oil Mutt. I just like what he said. He said, a natural gas well that is 50 years old, making 5 million cubic feet per day, which is pretty small, creates more power than the average wind turbine. It, of course, is far cleaner than that wind turbine is as well. For those not familiar, a 5 MCF well is a turd. Our turds run circles around the grifting wind energy. Never mind looking at our average gas wells or even oil wells. Defund wind subsidies now. I love it. Here's some more quotes. I don't think you can get to be a really good investor over a broad range without doing a massive amount of reading. Here's Warren. My policy is reading every annual report in sight that can further my knowledge about anything. John Templeton says, if you want to become really wealthy, you must have your money work for you. And that's where we're going to end it, guys. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. We've got a question and answer session coming up at 7 a.m. Mountain Time on Saturday. And we do have that special coupon code. Special is that coupon discount code for further savings. All right, guys. We'll catch you later. This is Finding Value.